Welcome to the Daily Business and Finance Show. President Biden's interest rate predictions, Chevron's credibility crisis, DEA officials oppose cannabis rescheduling, Bitcoin's potential rise to $115,000, U.S. considers blacklisting Chinese chipmaker CXMT, real estate stocks soar amidst macro optimism, Alaska Air faces DOJ probe over mid-air accident, Empirical Research Partners March strategy for chip stocks, and DraftKings North Carolina launch ahead of March Madness. Stay tuned after the short ad break to delve deeper into these headlines. President Biden is looking forward to a potential reduction in interest rates by the Federal Reserve. However, he has not provided a specific timeline for this change. Jerome Powell, the chair of the Federal Reserve, indicates that this process might commence within this year if inflation aligns with predictions. Nevertheless, he cautions against hasty reductions in rates. Loretta Mester, who serves as president of Cleveland Fed, advocates for a gradual easing of policy to prevent unexpected market shocks.
Chevron's acquisition of Hess, valued at $53 billion, is facing potential jeopardy as ExxonMobil pursues arbitration over rights to a significant oil discovery in Guyana. This situation could postpone the transaction by approximately 5 to 6 months, which may result in Chevron having to pay a breakup fee of $1.7 billion. In the meantime, crude oil prices have seen a decrease due to cutbacks from OPEC+ and worries regarding China's demand growth.
The United States Drug Enforcement Administration is currently examining a proposal that suggests reclassifying cannabis as a low-risk drug. This would place it in the same category as Tylenol and ketamine. Despite this, there are officials who have voiced their worries regarding the strength of contemporary strains and the lack of proven therapeutic advantages. The DEA has the authority to alter marijuana's schedule only if there is scientific evidence backing its medicinal benefits.
The forthcoming halving occurrence, which signifies a decrease in Bitcoin's supply growth, might potentially escalate the value of the cryptocurrency to surpass $115,000 by 2024. This forecast is derived from a study conducted by CoinLedger, a firm specializing in crypto tax reporting. Historical trends have shown that after previous halvings, Bitcoin's worth has typically increased by an average of 400% within 1 year. Nevertheless, this optimistic perspective is not universally accepted among analysts. Some anticipate a decline to $42,000 following the halving.
It is possible that the United States government will enforce new sanctions on a number of Chinese technology companies. This includes Changxian Memory Technologies, which is a prominent manufacturer of memory chips. The Commerce Department is contemplating the inclusion of Changxian in the Entity List, which would limit its access to American technology. This action could potentially impact 5 other companies based in China.
This week, real estate stocks shone brighter than other markets, propelled by a robust jobs report and positive sentiments about the economy. Even though unemployment saw a minor increase, wage growth decelerated, reducing the burden on the Federal Reserve to stop rate cuts. Mortgage rates took a dip as applications saw an upswing. The Real Estate Select Sector SPDR ETF registered a gain of 1.59%, outdoing most major market averages. Experts forecast an ongoing rally for real estate investment trusts due to declining interest rates and diminishing supply from 2025 onwards.
The United States Department of Justice is currently conducting an investigation into an event where a section of the fuselage from a Boeing 737 MAX, operated by Alaska Airlines, blew out while in flight earlier this year. The purpose of this investigation is to ascertain whether Boeing has breached a prior agreement that was related to 2 fatal crashes involving the 737 MAX in the years 2018 and 2019. Passengers who were on board during the incident are being notified that they could potentially be victims of a crime.
Empirical Research Partners is set to embrace a more cautious portfolio strategy in the month of March as they perceive limited unambiguous investment prospects. The company advises a decrease in semiconductor stock ownership due to their elevated price-to-earnings ratio. In contrast, it advocates for diversification into industries such as home building and banking. This transition is happening notwithstanding the latest bull market surge propelled by semiconductors and AI-related stocks.
DraftKings, the online sportsbook, is set to launch in North Carolina on the 11th of March. This expansion will increase its presence to a total of 27 states within the U.S., as well as Ontario, Canada. The timing of this launch aligns with both the NCAA tournaments and NASCAR season. In addition to this, DraftKings will be providing live odds on Comcast Xfinity X1 televisions. This feature enables customers to place their bets using their mobile devices. Despite experiencing a slight setback following their fourth quarter earnings report, analysts continue to hold a positive outlook regarding DraftKings' profitability for the years 2024 through 2025. And that's a wrap for today's The Daily Business and Finance Show. Keep investing in your knowledge, stay informed, and we'll meet again tomorrow. Farewell. I'm Montgomery Jones.
And I'm Amalia Dupre. Until tomorrow, farewell.
This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.